Director at TaroWorks for Market Development and Customer Success. So thanks for joining us today. Just to give a quick intro, we're super excited to be hosting this panel today with our guests. Since Grameen Foundation's inception, we've seen the evolution of what's possible with microfinancing and more broadly with financial services in general to the poor. And I think throughout, there's been a common thread that there are these agents that are going into the field and bringing these services to the otherwise unbanked. And so we want to delve into that a little bit in today's webinar. So in this context, in a couple conversations that I've had, the original title, Digitizing MFI Agent Network, seems a little narrow. So just to give some more context about what we're talking about here, a lot of these financial service providers have these agents, and it's really these people who are interacting with prospects and loan recipients. They could include sales agents and loan officers, and could even extend outside of microfinance institutions to include kind of mobile money agents. We're also seeing the needs of agents. Banking changing because of value chain needs and kind of bleeding into other industries like solar. And so these are some of the trends that we've seen, and the panelists will go into this in more detail, but there's definitely a lot happening, and wanted to kind of gather this group of experts in the tech industry and from the financial services industries to talk about what they're seeing. So just to give a quick introduction of who we have on the call, we have Gregory Macau. He's the IT manager for Musoni Kenya. He has over 10 years of experience in the financial sector, including several microfinance institutions in Kenya, in Tanzania, and Nigeria. We also have Antonys Koning. Antonys is the financial sector specialist managing CGAP's work on customer and employee empowerment. She's working on a set of tools to help organizations empower their field agents and become more customer-centric. And we have Brent Chisholm. He's a CEO of TaroWorks, and he's been in the technology industry and the emerging markets for many years, most recently leading African and global market development for Kopo, the mobile merchant payment system in Kenya and Tanzania. So that's who we have. Oh, great. Hi, Brent. Hi, everybody.
Hi, good morning, everyone. Sorry.
Good afternoon and evening. And good morning, everyone.
Before we jump into the questions, I have a couple housekeeping rules for the audience. Just as a reminder, you are being recorded, or this whole session will be recorded, and I'll be recapping it and emailing it out in case your colleagues are interested as well. Everybody is on mute by default. If you'd like to ask a question, there are several ways to do so. You can put it into the chat window or the question window, or I think you can raise your hand, and then I can unmute you when there's a good time, or when there's a pause or at the end. So feel free to send questions throughout for clarification. I could jump in and have those clarified for you, or as questions are coming to you, feel free to put those in too. So I think with that, let's jump in. So what I'll do is I'll have the prompts up just so the audience can follow along with the main question that's being asked. So let me switch over. Great. So the first question is kind of starting from historical view. In your experience, what is the history of systems that financial service providers are using, and what are you using now? So I think with this, let's start with Gregory at Musoni.
Thank you. Thank you for hosting me. I'm quite privileged to be part of the panel. Now, for Musoni, or rather, I'll start by taking through probably the systems that are being used, especially in East Africa and Africa. I think when we talk about microfinance has had a journey in terms of systems. We all started from a system that we could just manage client details, and probably avail a loan facility to that client. So it was more of a manual system. So over time, we have seen that systems have come in, tried to improve on the interaction that we have with our clients. And in the market, especially in Kenya, we have Terminals, which has been a big player, and Craft Silicon. We have MyForce that currently we are using, that is Musoni system. And we have seen some of the introduction of Orbit, which is equally good. But when you look at the market, the microfinance cannot afford Terminals. It's quite expensive. So Craft Silicon, MyForce comes into play, whereby institutions are able to take advantage of it and build other systems around it. So in our case, we use Musoni system as our core banking software. With the Musoni system, what it does, we are able to manage client details, that is register client, that is KYC details. We're able to do underwriting. We're able to track the client's performance through report and all that. But we have built up to facilitate now the agents. With the app, you find that our loan officer, or rather the sales representative, are able to reach clients who are remote with their tablets, with an app running in the tablet. They're able to register new clients. They're able to offer the services and products to the client without that client having to visit any office, our physical office. With that, it has enabled us to reach more clients without having to invest on the banking walls and all that. And again, for such system, you have to look at what kind of a system. The system should enable integration, because if you look at the history of major microfinance banking software, they are quite expensive. And if every time you need to build on it, it will be costing you. And as a microfinance, when you are starting, you might not be able to afford that customization, because you need an expert to come on board to understand your user requirement. And again, it takes time. So building another system around it becomes easier, and probably by partnering with a local provider. In how Musoni operates is cashless. Our agents don't interact with money. So we had to partner with the telecoms. That is the biggest telecom in East and Central Africa, that is Safaricom. With that, they have provided an interface whereby our clients are able to repay, they're able to send money to our account. And when they send money to our account, that money is pooled and it's updated to their client records. And when we are disbursing money, or rather we are offering the loan facility, we're able to use the same interface to send money directly to their mobile wallet. By that, again, it reduced, or rather it eliminated the need for our clients to visit our banking hall. So in a nutshell, we can register a client, we can fund that client, and the client can pay without even having to visit any of our branch. With that, we ensure that at least we are reaching out to clients and all that. So the biggest challenge has always been the integration. How do we reach to the client using our core banking software? But I've seen in the industry, people are partnering with other smaller institutions that know the market well to provide now an interface to ensure at least they're able to reach more clients and offer better services to their clients.
Yeah, I think that Musoni is been quite advanced in their use of systems, because in my experience, both from my time in East Africa, but also in talking to people, I think the primary technology that MFIs have used over the past years has been a very old one, pencil and paper, or pen and paper. And this move to digital systems has been prompted, I think, by a number of factors we're going to talk about in a moment. But the interesting thing to me, from coming outside from a slightly different perspective, is I think there's a real difference in the type of systems, in what a system is focused on can determine a lot about what it does. And the core banking systems are absolutely crucial for running any type of financial organization, but fundamentally they are organized around products, like particularly loans. So they're focused on loans. And from a different angle, customer relationship management systems, as they say in the name, are focused on customers and on people. And so you're going from a solution where you had perhaps a core banking system running the financial organizations and a system of people with pen and paper managing the customer relationship management. So sort of using human interaction to, I think there's a real potential to improve the overall ability to deliver service by using some of the tools that have become available more widely for managing customers and keeping track of customers and interaction. So I think that's going to be one big change, is the ability to use systems to manage people in addition to loans. And then secondly, the spread of, in particular, customer relationship management, much more than banking, they're making it available through the cloud as a service. So the software as a service movement has really took off with Salesforce in the CRM space and has broadened out from there, so that now you get a whole variety of applications available through the cloud. But the making these systems available from the cloud means that it's more accessible. The cloud plus the growth of smartphones has made these types of customer relationship management systems more accessible to a much broader set of institutions and people in those institutions than could have been used previously. So I think that's really, we're in the middle of a big change, a couple of big changes in how these types of organizations can use technology to improve their service delivery.
I have a question from Stephen Milambo. I think this is geared toward Gregory at Musoni. What is the category of clients that you serve most? Are they farmers, pastoralists, business people? Can you break down a little bit of Musoni's business?
Good. We have across. Basically, Musoni serves the low-income earners, and we are looking at our loan, probably the first loan being about $500. And mostly, as one of our mission is to have a social impact to our client. And we have, in terms of spread, we are looking at about 60% of our clients are from rural, about 20% from rural urban, and now the 20% from urban. So we are spread across the country, and in terms of portfolio, in terms of farmers' portfolio, it's also big, considering that we serve 60% of the rural. And our clientele base, in terms of female, we have about 60% of our clients are female, 40% male, and the distribution is on the rural areas. Yes, majorly why we took that approach is that in microfinance in Kenya, we find that the urban is already saturated. You have all the big banks in urban. You have big microfinance who have already converted to be microfinance bank. And traditionally, we could not appraise a farmer. If you look at a farmer was not visible in terms of financial. You don't know how much to lend this farmer because they depend on farming, they depend on season. So with a bit of digitalization on our end, we're able to automate all the farming products that we do have, whereby by using the agents, or rather the agents using an app that is connected, which is an extension of our Musoni system, our core banking software, we're able to appraise the farmer. By just visiting the farmer, we're able to capture the acreage of the crops that they have planted, the animals, are they using fertilizer or not? Do they have an agronomist, expert who normally visit and advise them? And we have the cost implication. You don't have to ask the farmer the cost, because already we have that as part of the cash flow model. By just capturing all this, we're able to project how much that farmer makes in a season and how much you should be able to loan, depending on now the variables that you have been able to input. That really helped us in terms of pushing that product, because now the product moved from being subjective to being objective. And since we were able to automate, we have seen a lot of improvement in terms of our product on the intake and even the repayment, because you are sure that this farmer will qualify for what they need. So, and once they qualify for that money and with the value chain in place, some of the money, the funds that they have applied for goes to the input. So you don't even disburse direct to them, you disburse to their fertilizer farm, fertilizer company that is providing them with fertilizer or seeds. So by that, we minimize the need for the farmers to utilize, divert the money from the core business, or rather from the core intention of that loan facility. So farming is something that, apart from even ourselves, the market has really embraced. And right now we have scoring. You're able to get a score from various institutions about farmers, and you're able to learn you're able to package a product based on the score, depending on your appetite.
Great, thanks for that clarification. Let's round out this question. Antonique, did you have any additional thoughts on this?
Well, I'm listening with great interest, and I just wanted to jump on something that Brent was saying. I think technology has just revolutionized financial service delivery, right? It's certainly helped to increase outreach and improve access to services over the last couple of years. And through these agent networks that are now connected through some of the digitized methods, we can reach further than before. But what we do realize, I think, is that in our still a big problem with usage. Many of the accounts that we're opening are dormant, insurance policies lapse, and mobile wallets are inactive. I think the latest count of the GSMA is still that 63% of the accounts are used less than once in 90 days, which of course doesn't show a lot of activity and a lot of relevance in poor people's lives. And more importantly, I think it also shows that there's the business case for serving poor people is eroded. So I think for financial service providers, there is an opportunity with the further use of technology and digitization to turn that around. And I think Brent made a couple of very good observations how we can use some of the newer systems and technologies to focus more on the people, to become more customer-centric versus product-centric focus, which I think many of the microfinance institutions and other financial service providers are still rather stuck in. I also like the references that Gregory has mentioned, where he refers to some of the systems and technologies and for instance, use of data analytics to improve services, to better learn from your customers, and then also apply that to the design of new solutions that are good for the customers and good for the business. So I think it's there is certainly a challenge out there, and I hear when Gregory talks about the cost of systems and especially when it gets to core banking systems, but also some of the other solutions that are out there and developed can be an investment. But I really think it's important to see customer relationship management systems as an investment that pays off over time, and especially if you compare that with the large kind of underutilization of services currently on offer. We do need to take these opportunities to improve the uptake and use of financial services.
Great. I think that's a great segue actually into our next question. So let me move to the next one. Which are, how have the goals of financial service providers changed over time? It seems like at the very beginning, it was just how can we get a handle on these loans and track that. But how has that changed at this point, and what tools are helping with that? So maybe, Antonique, it makes sense to continue on your piece and talk a little bit about your research.
Right. Well, I think that you've kind of referred to it already in your introduction as well. The notion that financial service providers were just pushing products out there and waiting for people to use them is not really is no longer valid, I would say. I mean, it clearly shows that there are missing pieces. And so what we would advocate for, and I think tools that can help with that, is a customer-centric business model. And what you need for that is agents in this context that are empowered to deliver a distinct customer experience. So we go beyond a delivery of a product to a delivery of an experience. And what you need for that is agents that actually have a good understanding of customer needs and preferences and behavior, so that they can actually interact with customers to the most kind of effective way. So the research that you hinted at is research that we're doing on employee and agent empowerment. And what we conclude is that agents need to be both willing and able to deliver a positive and a consistent customer experience. And so it's working on that part of the ability and the engagement of agents that we need to be thinking about, with the end goal to deliver value to both the agent as well as the firm and the customer. So you have to make sure that each one benefits from the interaction. And in the research that we've undertaken, we've kind of concluded with 9 resources that financial service providers and middle managers that actually have agents under their wing can leverage or strengthen to empower these agents. And maybe what I highlight here, you were asked for tools that can help with that. Just 2 pieces maybe. One is putting in place a range of tools and an infrastructure that agents can use to make the delivery of customer experience more effective. And I think a good example could be, for instance, a mobile-enabled customer relationship management system, something that Brett already referred to, that, for instance, could allow lenders to manage the end-to-end customer lifecycle on a single platform. What we've seen in many of our interactions with financial service providers is that providers don't actually have a holistic view of the customer. They know who has taken a loan. In another database, they have information about savings or another type of loan, but there is no holistic picture. And many organizations kind of miss that unique identifier that is required for that. So that's a very simple thing as it sounds, but it apparently is quite difficult, even with very good core banking systems, to get a handle on. And one of the examples I learned from a case study that Action did of an experience of an Indian software company that partners that used this mobile-enabled customer relationship management system actually reduced the time for loan processing by 43% and 45% of reduction in customer acquisition costs. So you can see that, as I said earlier, this is an investment that has a return. The other thing that I really liked about that particular case in India was that the frontline staff really appreciate the tool because they were able to directly respond to customers when they had questions, which obviously also improved the customer experience, but they also were treated with more respect by their customers because of the use of the technology and the professionalism with which they came across. So that's one example. Maybe one other example I would use is dialogue and support. Agents need dialogue and support that enable them to strengthen their understanding, solve problems, build trust, and develop their careers, because that's what's in it for them, right? And financial service providers can strengthen that, for instance, by institutionalizing feedback loops, connecting people across functions and locations, or leverage, again, technology that we've already referred to. And just one example of that I want to give is a bank in Indonesia that I've recently worked with to develop a gamified agent empowerment platform, which runs across mobile, web, and USSD. Again, the famous cloud that Brent already referred to is very helpful here. And the platform offers the branch's banking agents transparency. It offers capacity building with short tutorials, for instance, and it allows them access to a community of peers that is aimed at supporting the agents with a view to increasing the activity of both the agents and the customers on the banking platform. So I just thought these 2 examples could illustrate a little bit how tools can be used to improve both the customer experience as well as the agent's experience, which in essence is critically important if you want to improve the customer experience.
I'll add on to that, because I think we've all had the experience of interacting with a big organization of which we're a customer, and interacting with someone who doesn't have that history of our interactions with them and having to start all over. And it's super frustrating, right? It's super frustrating to be a customer of an organization, and every time you talk to someone, you have to start all over again and tell the history of everything you're doing. And it's in this way, customer relationship management systems, I think, kind of become like memory, right? It's an institutional memory that lets agents, even if the agent has seen the person before, pick back up again and not have to see what's already happened. And I think that's, I don't know how else you improve that customer experience at the agent level without providing the agents the background information they need to be able to help that customer. And I think that just generally speaking from a systems perspective, systems that are built to do that are a lot better at capturing customer data than systems that are built to fundamentally underwrite a bank loan. They're just built for different things. And while it would be great to have one system that does everything, in my experience, having one system to rule them all, to steal a line from Tolkien, results in one system that does a bunch of things not particularly well. You would be better off getting a system that's really good at doing core banking functions and a different system that's really good at doing customer relationship management, because those two things are completely different and require a different focus. You need to tie them together, but expecting one company to be excellent at both underwriting process and excellent at how you manage customer data, including things like photos and geo coordinates and barcode scans and other things like that, it's just a tall order.
Probably just to add that, I totally agree with you, Brett and Antonio. From our end, we changed, or rather we had to re-engineer our processes and our product so that we can capture the customer experience bit for our client, and with that we're able to come up with a digital product that runs on the cloud, that is on the USSD. With that product, we eliminated, or rather we bypassed the need of our agents to visit, or rather to underwrite a loan facility, meaning that the client can originate with a loan, and the system is able to automatically approve and disburse to the client, as long as they meet the set business rules that we have captured in this. We have captured, or rather inbuilt for that product. And for us to achieve that, we had to integrate with the CRM. The CRM is whereby we looked at the attendance of the group members, or rather the client, meaning that we have in our system a different app that monitors the client attendance in a meeting, and we are able, our loan, or rather our sales agent, are able to log in and log the attendance time, and also the same applies with the client, or rather the group members. With that, we're able now to capture we're able to capture the behavior of the client, and capturing that behavior, we incorporated that as part of the business rule for you to qualify for that loan, or rather it also has an impact on how much you qualify. So with this product, it's supported by a contact center, or rather a customer experience desk, whereby once a client applies for the product and the product is disbursed to them, we call them. We have agents that normally interact with the clients just to find out how the product was, how was the experience when they were borrowing, which areas do we need to improve. But remember, at the end of the day, this is a product that is meant to improve their customer experience, because we have eliminated the paper, we have eliminated the agent from visiting them, wanting to know the purpose of the loan. So for sure, we have seen a big shift from our emergency loans, the traditional loans, to the digital product that clients can apply today, pay tomorrow, apply tomorrow, pay. So they are able to manage their own finance with that loan facility. So I can say that moving to the customer experience has really helped on our bottom line, because now we're able to retain more clients. Clients are satisfied, they feel appreciated, and they know that we value them, because we have to interact with them. We have to capture their response and probably come up with a business, or rather, we come up with business rules that are able to capture their response. By that, it's not them knowing us, it's Musoni knowing our clients much better, and we're able to use that data for future in terms of enhancing any product or coming up with any product that we need to roll out to the market. And that's our experience with the digital product. So far, so good.
Great, it's exciting. Let me jump in with a question from the audience. We have a question from Priscilla Choi. Brent, you mentioned that the main agent tool of the past has been pen and paper. What are your thoughts on actual adoption of these newer digital systems? Specifically, do you find users who are resistant to using digital tools and prefer pen and paper? So I think that sort of goes along with, these are big changes. How are you finding people moving toward them?
Yeah, that's a great point, and it actually, I think we have a question later in the thing about exactly what are the roadblocks to success, and that was what I was going to talk about, was the user adoption in the field. So I think there's good news and bad news. The bad news is you are absolutely correct. Mobile user adoption is the key to making this all work, and it can be very difficult to make it happen. The good news is lots of organizations and lots of different industries have done the same thing, because there's other industries that are rolling out customer relationship management, and there are ways to make it happen. So we have a couple of webinars. If you go to our YouTube channel, we have a couple of webinars just purely on the topic of how do you get mobile users to adopt. But it's also would be worth revisiting the webinar we did last with an organization called Soil in Haiti. And they did a couple of things that I think are great illustrations of how you can get agents to adopt these systems. So they did a couple of things. For starters, they spent a lot of time thinking about the process and testing it themselves, so they were certain the system would work before they rolled it out. And then when they did roll it out to the agents, they did training, and this was in Haiti, and in Haiti there's a big culture of certification, and so they produced TaroWorks certification certificates, and that was something that the agents sort of felt like they had really kind of achieved a certain level of expertise on it. And then they did a lot to market actually the cell phone as the mobile phones in this case, as a hip product. It was bringing the organization into the modern world. And so the field agents, one, they felt like the technology sort of made them look more important and was flashy and was kind of cool. Two, it worked because they had spent a lot of time testing it. And then they ran a number of games that they with the agents during the training. So one example they had was a find the customer game, where the agents needed to find particular customer sites, and when they got there, there was like a little balloon with candy attached to it or something like that. So essentially they did that gamification that Antony talked about with that other provider. This was not a game app, but essentially approaching the training in a way that was interesting and engaging. So I think the good news is that mobile user adoption isn't going to be any more difficult in the digital financial services industry than anywhere else, and there's a lot of different things you can do to make it happen, but you have to make sure the technology works, make sure people understand how to use it, and then to the extent you can, make it a enjoyable and interesting experience to learn that adds to their to their sense of how they present themselves in the market. And I think those three things together can really encourage adoption. And in the case of the Soil in Haiti, they ended up not only did the agents adopt it, but they ended up suggesting a lot of new jobs and things like that the organization could use because they began to find it useful. So a lot rides on how you roll these things out, and spending time to do it right will really pay dividends in the long run.
Yeah, if I can just add to what Brent is saying, I think I totally agree with what you're saying. I think two other thoughts that come to mind is, as you develop these systems, make sure that you consult your agents and other people that are going to use it throughout the cycle. So if you do co-create, as the word that they oftentimes use, these solutions with them, and you get their input in terms of what they need and what they find useful, then the likelihood of the system being functional and supportive to them is greater. The second thing I would mention is that oftentimes the roadblock to any change is legacy systems and people's mindset. So getting over that, you also need to incentivize, right? You need to get a culture that actually incentivizes people to take up these new solutions, interfaces, systems, and and reward agents for using them. And I'm just thinking about an example of a mobile money platform in Southern Africa, where they really focused on ways to incentivize agents for engaging with customers, for listening to customers, for kind of being the best problem solver of the month, for kind of having a focus on other than the traditional sales figures, which is oftentimes the culture in many of these organizations. And as you shift the incentives and offer these tools that can help and support agents in becoming better managers of client relationships, then I think the adoption of those tools will be supported in many ways as well. So incentives and making sure the system works for the people that you're actually designing it for by involving them would be two additional points I would raise.
Great. I guess maybe on that note, Gregory, do you have any insights as to, you know, as Musoni is shifting toward being more customer, or being more focused on the customer experience rather than just customer service, like how has that change happened at Musoni?
Yes, I think as I had mentioned before, is that this was a big shift for us, because what used to happen is that basically we used to perform our job. If you have a target, you meet your target. If you're supposed to onboard 100 clients, you onboard 100 clients. If you're supposed to underwrite 100 loan accounts, you just underwrite 100 loan accounts. So basically what we did was that we had to change the focus to ensuring that even if you are underwriting 100 loans as per your target, the customer is enjoying that experience of those loans. And by doing that, we had to improve on how we deliver our product and services to our clients, and more so, especially on the follow-up, because at the end of the day, customer experience is just getting feedback, having dialogue with your customers, getting their opinion about the service and the product, and using that feedback to improve on your product and services, and regular checking on your clients, how they are faring in terms of the loan facility. But again, as one of our parameters, social performance is key for us. So even if we are offering services, what does the service do to the client? We should be able to move these clients with our product and services from point A to point B. You remember, as I mentioned, our loans start at $500. So by the time this client is graduating to about $1,000, we need to see the social impact of our product. And by that, we had to incorporate the social, the customer service element, whereby we have a dedicated team for that manages the customer experience bit of the institution. And again, the same, we use that to cross-sell products to our clients, to remind them of what we can do apart from the financial, even in terms of training of our clients on good financial practice and all that. So we have seen that shift, especially on retention. We normally used to probably recruit or rather onboard 10 clients, and at the same time we are losing a few. And you know, in microfinance, you cannot afford to lose clients probably on the newly registered clients, because in microfinance, we invest so much on clients in terms of training, taking them through. So by the time, as a financial institution, you are making money out of the products that you're offering for that client, it's almost on their second year with you. So for us to improve on the bottom line, we had to retain our clients. So this has really improved, because we are now improved from about 70% in terms of retention to almost 84%, which is pretty good in microfinance, considering the high turnaround of exit and all that. So with that, and again, as I had mentioned, using technology to come up with products that meet our customers' need. The customer experience, we are able now to get feedback, and we're able to come up with products that suit our clients. And again, that conform to the ever-changing environment in Kenya. Kenya is a bit, we can say, it evolves every day in terms of the mobile space. Today, institutions are doing this. Tomorrow, institutions are doing that. And the only way that you can be above, or rather ahead of your competitors, is by engaging the customers on what they need and what they feel in terms of what you need to improve and what you need to re-engineer as an institution. So we have seen a lot of gain, and it's really improving even on our bottom line.
I would jump in on that, because what I would say is, this is sort of answers a kind of a bigger question, which is, why do you need to overcome the roadblocks in the first place? And in talking to both microfinance institutions and other vendors in the space, I think there's a couple of things, that we all have to acknowledge. I mean, number one, there are a lot of institutions that are coming for microfinance organizations' clients. You have the mobile network operators offering things like Tamiza in Tanzania, and I forget the name of the Safaricom loan product in Kenya that's much bigger.
M-Shwari, that is
M-Shwari, right? M-Shwari.
Yeah.
So you have M-Shwari coming for you. You have the solar companies now offering finance securitized based on the value of the lantern. You have banks rolling out correspondent banking networks. I just was speaking with an organization in Uganda last week, and Uganda government has finalized the correspondent banking regulations there, and so you're going to see a bunch of banks rolling out correspondent networks. So there are a lot of organizations that are coming for your customers, and you're going to have to digitize to compete with them, because you need to be more efficient in order to keep up. And you're also going to need to diversify your products, right? So if you have a person just selling loans, essentially you're going to be competing with organizations that are offering loans and also solar lanterns, right? And that, if you were an agent, if you were a good agent, what would you rather do? Be able to sell just one product or be able to sell multiple? Well, the really good agents will want to sell multiple, because that can increase their chances of revenue. So you're going to have to sell a wider variety of products than perhaps you have traditionally. And it's hard to see how you can do that with just pen and paper and people's memories. And so I think that the roadblocks are tough. They're absolutely there, but the environment is changing, and you're going to need to change with it in order to keep up, or your competitors will come in and get your clients out from under you.
Mm-hmm. Actually, yes, that is true, especially in Kenya. Just to add, we have an institution that is availing loans facility based on your Facebook account, and to them they don't have a telephone number that you can reach them. You can only reach them through their Facebook account or Twitter account or email. They have eliminated the physical address whereby customers can visit them, probably just to get to know their products, or So we are moving away from the traditional setup whereby clients had to see a physical location, client has to see an agent. So I think it's really shifting completely.
I wanted to chime in with another question from the audience, and I think this has to do with sort of the importance of getting the agents or giving them the skills to be able to do their work in the field, and thereby increasing the bottom line. But I think there's something in there about like incentives. Gregory had mentioned kind of moving away from static performance metrics like underwriting 100 loans. What kinds of incentives are you seeing for this kind of change management? And specifically, we have a question from David Toll on the use cases in Indonesia and Haiti and using gamification as a tool. Were there any additional incentives that helped retain the agency network, such as training or otherwise?
Yeah, maybe I can jump in on that. I think it's a combination of many things, right? I mentioned in the beginning that we've kind of identified 9 different types of resources that you as a financial service provider could leverage or should strengthen to support your agents to do a good job and to be better in delivering the customer experience that you want them to deliver. And skills building is certainly a critical piece. What I do think is important is that we think differently about the kind of skills that we're building. In the past, people would have mostly focused on, product information and making sure that the agents are good salesmen. But I think what we're hearing throughout this conversation as well as what is required is preparing agents to become better relationship managers as well. Another part is the whole area around values and attitudes. What kind of culture do you set within your organization, and what kind of values do you pass on to your agents? And oftentimes that means how do you treat your agents as well. So I think there's a range of ways that you engage with your agents that influences how they themselves will be able to deliver that customer experience. With regard to the incentives, I think it is exactly as Gregory is saying, it's moving away from just checking the boxes for numbers to actually looking at what is the result of the delivery of the service, and you can think of indicators that look at problems being solved or how complaints have been handled, the deepening of relationships as indicators that give more emphasis on the longer term the relations with clients are. So there's a number of ways, and that customer satisfaction indices can also help in metrics to measure that kind of performance. But overall, I think it's taking a more longer-term perspective. Oftentimes, the targets that we've had, and specifically in microfinance, I think have been rather short-term, focusing on day-to-day sales and repayment of loans. But I think the notion is to try and get to a relationship with your agents that looks and rewards the longer-term perspective as well. I hope I'm answering the question that you had there from the audience.
Okay, we do have a couple questions from the audience. So for Gregory, question from Stephen Malambo: what are the key concerns that have been raised by clients for Musoni systems?
Okay, the major concern has always been the downtimes. For instance, now that we have partnered with Safaricom, the telecom, to facilitate clients' payments and also repayments from them. We have had several downtimes due to probably an upgrade from their end or unavailability due to network issues. And with that, it really compromises on the quality of their repayment, because, there is no any other way we can receive money from clients. Remember, we are cashless. So that has always been a concern. The other issue has always been something to do with customer literacy. Basically our customers, most of them are semi-literate, and sometimes they make mistake when they are paying, or rather they are transacting with our system. So most of the time, the money, or rather their funds are posted, because it's real time, they are posted to a different account. Those are questions that keep on coming. But to mitigate on that, we have invested on training of our agents, training of our customers. So primarily, one of the major role of our agents is that they have to keep on training their client, because we have eliminated much of the process whereby they are not dealing with money. They have app that enables them to fast track the application, the onboarding process and all that. So they have time to educate the clients. And with the introduction of the customer experience desk, our clients have the liberty of calling any time of the day, because it's a 24 hours desk for clarification and even follow-up. So basically, those are the issues that we face, literacy, and together with the downtimes that we might experience. Because, as we said, for us to deploy a digital environment, we need partnership with service provider, and to some extent, you want to miss downtimes here and there. So those are something that we are always ready, or rather available to respond to our clients.
Great.
Yes.
One quick question before.
I hope I've answered clearly.
Yes, thanks, Gregory. I'm going to ask the panelists to give a quick round of parting thoughts. I think before we do that, one quick question for you, Antonique, from Gijo Antony. Antonique, you were mentioning about a software company which developed a software which is helpful to enhance the efficiency and customer experience. Could you please mention the name of that company?
Yes, so the specific firm that I was referring to is R2 in India, and Action did a case study of them, and I quoted some of the figures from that. I'm happy to send the link to the case study to you, Elaine, and then you can share it with the respective participant.
Sure.
That would be great, actually.
Great. Okay,
and
great.
Maybe I can kick off with my parting thought then. Yes, so I just wanted to say, I mean, I think this has been a great discussion, and I really enjoy the interaction, good questions asked as well. I just wanted to highlight that some of the work that I've mentioned is indeed part of the agent and employee empowerment toolkit that we're creating, which will be integrated into the customer-centric guide that CGAP has launched. And oh, that's very nice of you, Elaine. You've got the picture of there. There you see the URL for the guide, which is already live. We will be officially publicly launching it next week, but this is a sneak peek that you're getting. And a lot of the resources that you find on the top end, you click on resources, you find a lot of resources that can help financial service providers become more customer-centric, and issues around how you support agents will be coming out there in the next couple of months as well. So that's all for me. Thanks again for inviting me to join the panel, and I've really enjoyed the discussion.
Great.
Okay. For me now, first and foremost, I want to thank you. Really enjoyed the session, the discussion. What I can say is that digitalizing is not easy as an institution. You have to have the right support from the topmost, that is from the director. Your business plan should be centered around digitalizing, and also the customer experience in terms of even operations, in terms of even the product, and even the personnel that you employ. So it's a journey that once you start, there is no way that you can say that you are comfortable, because every day the dynamics change, because customers will always request for new things, because they are exposed to new products from your competitors, and therefore you must be able to respond to their needs. For me, I can say that I'm in charge of the digital lending as much as I'm in IT. So now we have, at one point we are going to compare as an institution, do we go the digital lending full, or do we also retain the traditional microfinance, whereby we have to depend on the agent, because digital is all about putting processes in place and infrastructure, and you're able to lend to your customer using the data that you do have. So I'm grateful, Elaine, for the invite. I look forward for many more, and thank you. And it was a good time and enjoyed myself.
Great. Thanks for the insights, Margaret.
And I'd just like to thank our two panelists for joining us and giving their time. I've learned a lot from listening to them, and really appreciate them participating in this. Also, I'll just put a plug in there. If you enjoyed this webinar and you found it useful, Elaine will be posting a recording of it and also producing a little synopsis of it. So I'd encourage you, if you've registered, you should get that in your email. I'd encourage you to share that around to other folks in your networks who might find it interesting as well. I think from my perspective, this is an exciting time. There's a lot of new possibilities of what organizations can do in the regions that we work in, and that are being made possible by the smartphone software available as a service. And so that means a lot of change, and change can often be difficult, but it also means that what you can do and your possibilities are really expanding. So I think it's an exciting time and that we live in, and there's a chance to really advance financial inclusion across the world, and that's great. So I'm looking forward to seeing how this all evolves.
Great, exciting times indeed. Thanks so much for sharing your insights, and also to the audience for your questions. I have the email addresses here if you have any personal follow-ups. And as Brent mentioned, I'll be sharing the recording and a written synopsis of today's panel. So I think with that, let's wrap it up right on time. And thanks again, everybody.
Thank you.
Thank you. Bye-bye.
Thank you.
Bye.
Bye-bye.
Bye.